Hey everyone, this is Caleb Franzen with Cubic Analytics. It's Wednesday, August 17th, and I wanted to put this video together to talk about the broader crypto market and specifically to highlight the different things that I'm seeing in the price action of Bitcoin. There's been a big narrative, and this is something that I've really been chiming in on, that Bitcoin is really underperforming broader risk assets in this environment. And it's certainly been a little bit strange to see stocks and broadly speaking, the S&P 500 or the Nasdaq 100 just continue to hit these higher highs on a short and medium term basis over the past several weeks. But Bitcoin has really just kind of been chopping around in this 22,500 to 24,000 range. And it's really struggling to maintain upside momentum. So with that kind of initial introduction out of the way, let's go ahead and dive straight in. First and foremost, right here on this chart, we're looking at total crypto market cap. And what I highlighted back in late June was that it's very possible that we might see a broader kind of market rally and retest this 161.8% Fibonacci level from the 2017 highs to the 2018 lows. We can see that that really acted as kind of the breakout launch pad here at the end of 2020, early 2021. It acted as support throughout 2021. And as we failed into that level, we came back, perfectly used those 2017 highs as support, and now we're rallying back up. And so what I outlined at the time is it was very possible we would rally into this 161.8. That would provide an amazing opportunity for a lot of investors who maybe had some shaky hands to de-risk and reduce risk across their broader portfolios. And what we're starting to see now right away is a weekly candle that's starting to sell off. Whether or not this actually produces more downside momentum here is certainly up for debate. But if we zoom in, instead of looking at weekly candles and instead we look at something like the daily candles, what we can see here is we're now working on the fourth consecutive day of a red candle. And I mean, look, it's very unequivocal that this range here really tried to act as support. Once it officially failed, we got that massive flush back down. We rally into this pocket, and now we're starting to sell back off. Again, this is very early stages, so we don't know exactly what's going to happen next. But, I've really outlined this scenario here as, I really would not be surprised to see a retest into this kind of lower range, if you will. Let's focus specifically on Bitcoin. The big theme that I've really been driving home to investors over the last 6 weeks is that we're in this kind of golden pocket of an accumulation zone. And what exactly do I mean by that? Very simply that if we look at something like the 12-month Williams %R oscillator, which I have on the lower bound of this chart, we could see that it's very rare for Bitcoin to be trading below this oversold lower bound threshold. And so when I look at this data and I see that these oversold levels really act as a strong accumulation period for long-term investors to continue to stack Bitcoin, perhaps at more aggressive levels. Over the long run, the investors who have purchased Bitcoin in these areas had to endure some short-term pain, as we see through these periods here, especially in the early start of this cycle. But over the long run, those investors are rewarded for their patience and quote unquote bravery to stack during those oversold periods. And so Bitcoin has been in that 12-month oversold range now since the end of May. And we're essentially, we're in the third month now, if you will, of being in that oversold period. Whether or not the lows are in, I almost don't even care to answer that question anymore. No one knows. Anyone who tells you is just purely speculating. Could the lows be in? Absolutely. Could we fall to new year-to-date lows? Absolutely. One thing I do know for certain is that we're in this extremely strong accumulation period. Like I said, we're looking at it here on a 12-month basis, but if we look at something like the 18-month, we see much of the same. Let me just go ahead and get rid of these lines because they're going to be slightly different. But generally speaking, when we've crossed below this oversold threshold, once again on a 1.5 year basis, 18 months, this has also been an excellent period for long-term investors to be stacking Bitcoin. And this also confirms what we're seeing on the 12-month Williams %R oscillator. If we zoom in a little bit and look at the daily price action of Bitcoin, I've been voicing a little bit of concern to investors right now because the price action that we've been seeing is eerily reminiscent to Q1 price action from earlier this year. What do I mean by that? We had this kind of wedge pattern, ascending triangle through here, and a faster one, very similar to what we're seeing right now. What happened back in this zone, this was essentially late March, early April, we had a failed breakout above this support and resistance range, very similar to the resistance range that we're in right now. Tried to break above it, but we're losing momentum very rapidly. And so as we look at this chart purely from a price structure perspective, we can see a lot of similarities. So I was very keen to see, well, let me say it this way. I was very keen to implement Williams %R analysis onto this chart and try to see if there are any similarities or patterns. So what I've done is I've added the 60-day Williams %R oscillator. It's a rough gauge for the 2-month oversold and overbought trend. And what we can see is that as we've kind of come into this overbought level, this upper bound, and as we've crossed below it, that's what's led kind of this cascade of price pressure, right? That's exactly what happened in mid-November of 2021. It's exactly what we saw in late March, early April of 2022. And guess what? It's exactly what we're seeing right now. So I don't know if history is going to repeat. I don't even know if it's going to rhyme. One thing that I know for certain is that from a statistical perspective, we're seeing a mirroring of behavior that aligns with the mirroring of price structure that we had earlier this year as well. Now, considering that the medium-term trend, the 9-month trend that we've been in has been to the downside, this certainly should not be a speculator's market, but that's exactly what we've been in for the past 6 to 8 weeks. We've been in a speculator's market. The thing is, we've started to see material evidence that the fundamentals are improving. They're still not good, but they're certainly improving, whether we're looking at economic data, retail sales data, inflation, this, that, and the other. It's all kind of trending, at least in the short term, in the right direction. And financial market operators, if you will, financial market participants are betting that inflation is going to continue to go lower. But it's been very strange, like I said, to see that Bitcoin is not keeping up with the S&P 500 or the Nasdaq 100, particularly in a market where risk assets are outperforming more than anything else, right? So if we denominate a risk asset by a slightly less risky asset, what we're seeing is that ratio, that relative performance is trending to the upside. But when we look at something like Bitcoin, and if we denominate it by the S&P 500, for example, we've essentially been making no ground for the past several weeks. What we're looking at here is the price of Bitcoin denominated in the S&P 500 using weekly candles going back to mid-2016. And the curious thing about this is we had this epic resistance level from the 2017 peak, and then this other level that I added here, which was the 2019 highs. And what we've seen now is that the price of Bitcoin has used this as a breakout launch pad, as support in 2021, and we're trying to act as support now. But if we zoom into this level, let's just go ahead and switch over to daily candles. What we can see is we've essentially made no progress for the past month plus, right? I mean, this range here is exactly where we were trading on June 18th. Today's August 17th. It's been almost 2 full months where Bitcoin versus the S&P 500 has just been moving like this. There's been no clear direction here, no clear market signal. And actually, I'm just seeing this for the first time, but we're starting to make lower highs, right? Conversely, or not conversely, but just to add to kind of the point that we're seeing here, we're also making higher lows, which is a good sign. But look, right now we're coming right into retest this lower bound. I would perhaps fortify this lower bound by adding it to this low wick right here, but we're coming right into this range today. This is not necessarily a good sign if you're a Bitcoin bull and you have no exposure to other risk assets in the stock market. Let's go ahead and move on, right? Let's look at Bitcoin divided by the Nasdaq 100. Very kind of similar overall price structure here. We can see that the 2017 peak didn't nearly act as a viable support or resistance range either in 2020, 2021, or this year in 2022. The thing that I find a little bit interesting is we actually have this near perfect wedge kind of forming, right? So if we just zoom in purely into this wedge, what we can see is this lower bound has acted as perfect support even during the COVID collapse, if you will, where we had the weekly candle couldn't even close below that range. That's why I've tagged it through there. So we kind of have this fortified rising support trend line. The thing that I find a little bit concerning, very similar to the trend that we were just looking at for the S&P, is we're not seeing any decisive direction here. In fact, it's even weaker than what we saw in Bitcoin denominated by the S&P 500. This has been 9 straight weeks of zero progress. And again, let's just go ahead and switch over to daily candles because we were able to find some interesting dynamics there. Again, we're right on that support trend line. This is a critical level that bulls really need to defend. And we can also see that, we have this clear resistance trend line. And, we're getting squeezed, but we're losing momentum very quickly. And again, this is very odd because, as I said, we're through this kind of bull run that we've seen, or this bear market rally, if you want to call it that. What we've seen is the riskiest bucket of assets are outperforming the less risky bucket of assets, regardless of what we compare it against. But for some reason, that has not been the case with Bitcoin denominated by anything else. So this has been a little bit worrisome to see on a broad market kind of basis and comparison. One thing that I do want to highlight, just kind of as a final note, is it's not necessarily fair to say that Bitcoin isn't outperforming anything else. One thing it certainly has been outperforming over the last several weeks are US Treasuries. What we're looking at right here is TLT. It's the iShares 20+ year US Treasury ETF. And what we're seeing, very similar to that S&P 500 structure, price is rallying on this former resistance level from the 2017 peak. We're back above that 2021 support level, and we're kind of consolidating now in a wedge with this support resistance zone as well as this trend line coming through here. If we switch this back to daily candles, let's just go ahead and see what we can find. The good thing that we're seeing here is the development of higher highs and higher lows amidst this trend. This looks much more similar to what we're seeing in the raw price action chart of Bitcoin, which does make sense to some capacity because bonds typically aren't going to move too much. But generally speaking, we're making higher lows through here. And you could certainly make the case that we're making higher highs through this range. Bitcoin's even selling off as I'm making this video. But this looks very similar, right? And so this has certainly been a pocket of strength. But again, if we're really comparing a risk asset versus another slightly less risky risk asset, what we're seeing is that Bitcoin is not really making much ground at all. And this kind of indecision, if you will, in the Bitcoin market is something to be scratching our heads at. Before I cap off this video, I'd just like to briefly mention what's happening with Ethereum. I've been posting for the past several weeks now that this teal range right here is a very clear level that investors could be managing risk against. What do I mean by that? For a trader or a more aggressive investor, what they could be doing is essentially being long Ethereum or other layer 1 smart protocol crypto projects, so long as Ethereum remains above this former support and current resistance zone. Considering the fact that we've now broken above this range, it is now possibly going to act as potential support as we come into this range. Ethereum has clearly been holding up much better than Bitcoin during this rally. The one thing is, can it sustain that, or has this simply been a kind of merged trade that's also been boosting the price of Ethereum? I've been very vocal that my expectation is to see somewhat of a buy the rumor, sell the news event with respect to Ethereum and the upcoming merge in September. However, this price action is very interesting. I think broadly speaking for crypto overall, it's very hard to be bearish so long as we remain above this level. Could you de-risk here? Absolutely. That's exactly what I would be encouraging investors to do. But someone who's a little bit more of a trader and a short-term investor could certainly be, like I said, managing risk against this level. You could place stops down here. So if you were trading something like Atom or AVAX, let's just go ahead and pull up Atom. Price structure again is very similar, right? We have a clear higher lows and making higher highs through here. We're facing resistance at a somewhat logical level, but getting squeezed along the support trend line. And so this is something that a very aggressive trader might be interested in taking a risk on, so long as, like I said, Ethereum remains above that key kind of support and resistance zone. So this is just one example. Again, I'm not encouraging people to do this, but if we just think tactically about how investors could be navigating this market, this is just one example about how let me say it this way. This is just one example of how I would go about managing risk in the crypto market. I'm going to cap it off here, guys. I hope everyone has a great rest of the week, and I hope these markets start to improve a little bit more, or at the very least that we get some clarity on the direction. Cheers, everybody. Talk soon.